It's time now for a look at the market action here in Korea and around the world. And for that, we're joined on the line by Mr. Daniel Yu, Global Strategist at Kiwoom Securities. Mr. Yu, thanks for coming on.
Thank you for having me.
So we heard just now that the Fed kept interest rates where they are, not seeing a need right now for a shift in policy. What was the reasoning at the Fed and how have the markets reacted?
Well, clearly the market was down because of the news that the Fed is not going to lower interest rate anytime soon. I think we need to look at some of the inflation numbers first. If you look at the current inflation rate, it's only about 1.9% below the Fed's target. And also the core personal consumption expenditure price index was up only 1.6%, much lower than 2% target. This was the reason why the market was expecting maybe the Fed might think about in the future lowering the interest rate. However, though, because of the Q-on-Q numbers of the economic growth rates were coming in very strongly in the first quarter, the overall growth rate was coming in at 3.2% year on year. So that's why the Powell said that current inflationary pressure being low is only a transitionary. So because they're worried about a little bit of the inflation might be picking up because of the stronger economic growth rates. That's the reason why right after the announcement, U.S. dollar strengthened. Rate rose from 10%. 10 years rate rose from 2.44 to 2.5%, and also market shows somewhat of corrections. I think we need some additional catalyst for market to go up for U.S. The things that we are looking for is still, number one, the rate cuts, and the number two is the China-U.S. trade negotiation settlement, and the third would be the OECD economic leading indicator turning around soon.
Well, here in Korea, the Kospi started out a little weak this morning, but shot right up in the early hours. Now, what was behind that? Was the Fed decision at all related, or if not, what was?
Yes, it's not necessarily the Fed. I mean, if the Fed decision was making an impact, then the market should have gotten down. But you've seen that the Korea's probably economy numbers being the worst in the first quarter, and the numbers are picking up a little bit after the worst quarter is over. As you heard, for that, the GDP was falling in the first quarter Q-on-Q by 0.3% versus the consensus of 0.3% rise. However, though, we are seeing going into the April, Korea's business confidence index was rising from 73 to 75. And also the industrial productions were picking up to 1.1% growth rate, and the retail sales were up also 3.3%. And also the biggest concern was the sharp decline of the facility investment, over 10%, but that turned around quite sharply to 10% growth. Also, the export numbers were coming in at 2% decline, which is less than 5% decline expectations. Furthermore, people are thinking about the DRAM prices might be picking up in the second half of this year. So all being said, because of the cheapest market being the Kospi, and some of the economic numbers are turning around, people are expecting that Korea might do much better than what they've done in the last few months.
Got it. Well, also this year we've seen the Korean won weakening against the dollar in a pretty big way. But today that turned around slightly. What's happening with the exchange rate now? Right.
The exchange rate is kind of stabilizing somewhat. It has sharply risen to 1168 won to dollar, which is a almost 4% rise from several months ago. This kind of sharp rise is all about related to the economic growth rate. Everybody been worried about the economic growth rate slowing down. And also because of that, there is a chance of the rate cut coming in by the BOK. People are talking about third quarter rate cuts. Also, because of the Korea's export skewedness, falling exchange rate is definitely good for exporters. And there's been some rumors that the contract prices for SK Hynix and various other export companies were affected by the exchange rate that was set at the end of April. So that's why the recent rise of the currency in terms of the depreciation has been happening. But today, as you said, it has gone down slightly to 1164 level. In the long run, we think that one should appreciate over the period of time, given that Korea continues to generate trade surpluses and also the fiscal deficit numbers are very timid. So all being said, won appreciation should gradually happen in the future.
All right, Mr. Yu, that's where we're going to have to leave it today, though. Thanks for your analysis, as always. We appreciate it.
Thank you very much.